Good afternoon, everyone. I'm Vikram Kasat over here. Since Sandeep sir has got like an urgent meeting right now, so I will be taking care of our chapter 1 unlisted space, smart wealth creation ideas. Hope everyone can hear me. So unlisted markets will quickly discuss why it's important, and it's a very big opportunity. So it's one very exciting form of alternative investing in via private OTC markets into existing unlisted companies. This space is properly known as unlisted equity investing. With the massive valuation growth in companies that got listed in some years, post their unlisted debut, names like BSE, Policybazaar, Nykaa, Paytm, Star Health, and yet to be listed, but heavy gains already accumulated. One of the example is National Stock Exchange, Tata Tech, etc. The private market has caught the fancy of retail as well as HNI investors and family offices. So PLPL has been offering its services to all kind of investors by intermediating the entire transaction and bringing some of the best stories to your Demat account. So let me start. What exactly is private equity investing? So private equity investing may be done by investor in a wide variety of ways, including direct angel investing, which we have heard of, venture investing into companies via venture capital funds, direct transactions with promoters or employees via category P, via category 2, pre-IPOs, AIFs, or via what is called unlisted markets. Typically, most form of investing career has huge risk, especially direct investing into seed stage or have a large minimum requirement like AIFs, or it may be a immature entity, pre-growth stage capital, posting risk to the investor capital. Otherwise, the unlisted market, in the other hand, mostly is about mature companies who have reached or are near mature stage and a history of detailed financials, which is mostly available and maybe preparing for the IPO in next 2 to 4 years. The risk, therefore, lesser in these markets relative to the other private investing. Unlisted investing, so is basically, this is unlisted investing. It's the private equity for masses. So one can come with very low amount like 50,000, 10,000, 20,000 also in these markets. So unlisted firms could be private companies that have still not decided not to launch their initial public offering IPO. Instead, they have depended on private equity firms, angel investors, and venture capitalists. Since they are doing well, the stocks begin to appear in secondary, OTC, over the counter, and a buzz starts around this. This can be the first stage. Other is possibly that a company make its IPO plan public via DRHP filing, and therefore to either avoid lock-ins or to generate liquidity inside and insiders start looking for quotes on private markets. These shares could be from founders, early investors, employees of the companies who got this via ESOPs, etc. Either way, the fact is that unlisted shares of good entities find their way into secondary OTC markets and has a process of market making begins. So unlisted shares offers multiple advantage to investors: access to potentially undervalued stocks, which it finds its right place on listing, access to stories in space not available in listed markets yet, including innovative platforms. Prices may not be correlated to listed market indices at all times, as these are private markets, and hence diversification potential in this. So unlisted shares have their own opportunities. And of course, there are risks too, as these markets are relatively illiquid. information, it's at times harder to get, like very harder to get, like what is the price, prices may be opaque, there will be a bid and ask of 5-10 rupees. So finding the right opportunities is critical, which is the risk over here. Also, since these transactions are private transfer of securities between entities and away from exchange platform, the counterparty risk may exist unless not managed well. So I will tell you 2-3 examples. So there are some large range of stocks available in unlisted markets, which are generating interest in secondary markets, and some like the NSE share have been had the monthly turnover in the OTC market exceeding most stocks in the Nifty recently, with the names like NSE, Studs, HDFC Finance, Care Health, Chennai Super Kings, Tata Tech, etc. They are generating volumes and inquiries a lot. Some of the well-known names and the recent ranges of trades sourced from publicly and which was given in the transaction. So this names would be there. And one of the major names which we have done, one was Orbis in the recent time. So what exactly you have to cross the process? So there are some IPOs where there will be lock-in and taxation would be there. So this is the list which I was sharing with you, some of the prominent companies' names. See the names wherein you can put the money before it get listed: NSE, NSDL, SBI Fund, Orbis, Care Health, Motilal Oswal Farm Finance. And these are the rates. These are the today's prices. So from which one can have a look of Hero FinCorp, one can look NSE also at this current market time, then Care Health at this time. So this we will be updating on a daily basis, letting you know what exactly the prices are and how's the things. So I will just quickly tell you, first I will go through this lock-in and taxation part. So always note, pre-IPO shares have a lock-in period of 6 months, which means that you cannot sell the shares until 6 months from the date of listing. If you continue to carry them through the IPO, otherwise you may sell this in unlisted markets at any time prior to the IPO. Because these equities are not traded on a publicly listed stock market, no STT, securities transaction tax, is imposed on them at the time of acquisition. These shares, therefore, have a different tax impact than regular shares listed on recognized stock exchange where STT is paid. Taxation, there are two ways in which you may dispose of your unlisted shareholdings. Unlisted shares sold off market, that is before a company gets listed. STG is applied for sale within 24 months of acquisition, taxed at marginal rate. And LTCG for after 24 months of acquisition, 20% with indexation or 10% without indexation. And for non-resident, it would be 10% without indexation. Unlisted shares sold post-listing, then time period is as per the listed equity, that is 12 months. STCG at 15% in STT is paid on disposal, and LTCG is at 10% without indexation benefit. So this is the above or interpretation of existing tax regime, but we request readers and everyone to consult their own tax advisors and auditors for opinion on this, on the pre-IPO shares. So first we will start with how you can invest into this. So PLPL offers supporting data and reports on the stocks, which will look fundamentally good and available at reasonable valuations. We will provide you some of the names where we have done our recent study. And also we will provide you all the data and the valuations that why we like the company. Then we will, however, investors to perform their own due diligence also for informed decision making, as some of these companies may delay their IPO or may not have disclosed all material information. Hence, sticking to quality is very important. We will leverage our network to assist you for buying and selling, and most transactions are completed within 48 hours, except for the companies where, like NSE or similar companies, which require a due diligence process by the issuing entity, and the process therefore is long. So this was, I was discussing with you, lock-in and taxation. So what we suggest is some of these companies which have huge demand as of now. So please kindly have a note on this. For any rate apart from this, you can email us at mfss@plindia.com with your requirement or seeking for latest quotes available from our market networks. Once you express your interest from the name of the stock and the amount you want to invest, we would share a deal sheet with you. On confirmation of the deal, client need to transfer the fund to our indicated pool account mentioned in the deal sheet. Please take care that not to transfer any of the amount to any other account. We will send you the deal sheet. On that deal sheet, the account will be account number and everything will be mentioned over there. So within the next 24 hours, you will receive the shares credit in your own Demat account. So I would request, please do speak with your relationship manager to understand more, to inquire about current opportunities, prices at which trades may be executed, or you can email us at mfss@plindia.com for inquiries. So I will quickly tell you which are the companies where in this kind of valuation. One is like Hero Moto FinCorp, NSE. If someone has not bought NSE, one can look at the BSE's performance in the recent time and have a look on NSE. They can enter into NSE. And the same ways, Motilal Oswal Home Finance looks very good from here on. And one more request, if you get any quotes and the quotes, if suppose are like different from our quotes, we will initiate the talk with our network and try and negotiate for you for the better rates. So I would suggest, please start interaction with your relationship managers. This is one of the kind of the investments where you can get a benefit. And this stocks, whatever you get, will get into your Demat account. So it is safe. In 48 hours, it will be there into your Demat account. Thank you so much. Thank you for coming for the short notice.